All right, fantastic. Okay, so just a very, very quick recap of what we covered last week with our advanced system development. We decided that, or not decided, part of our process, obviously, as we move forward in the program, is to be able to uh, collect, consolidate, and put together or put forward ideas for strategy development. Now, obviously, some of you may not have done that before, some of you may have. But it's all really ties back into module 2 of our, or module 3 of our Pro Trader program. So when you do come up with an idea or a concept, obviously that has the potential to be developed into a system. Look at that and really work out how can we take that idea and I guess evolve that into a strategy that's a potentially good working productive strategy that we can use in the group. So many of you will have ideas that you've potentially got from your journey through the program. How many in the group have had an idea or a concept that they've been thinking about or they've identified that they want to really explore either now or in the future? How many people, as part of the process of going through the course or even previous to the course, have got an idea that they want to really kind of move forward as part of a concept? Excellent. So there's traders in the group who've got great ideas, and that's what we want to do. We want to take ideas and we want to develop those ideas into potential trading opportunities. So obviously the ideas are going to come from your journaling. They're going to come from chart observations, collaborations. They might be just something that you've been thinking about from reading, as in reading other kind of information or looking at other types of strategies that you've thought, well, maybe I could take that strategy and put a different flavour to it. And I'm going to talk to you about the process I went through tonight when I was developing up like a multi-system strategy. And I'm going to talk about that because I think it's good to see how strategies evolve and where they come from. So the elements of the concept, obviously, you're going to have your entry criteria, which we spoke about last week. What percentage of the entry criteria did we say? What percentage of the overall system is the entry criteria? How important is it in the system? It's about 20%. So that can come from indicators, price action, timing, or market environment. So there's a number of ways we can get into the market. Obviously, we can use one or a combination of those entry criteria. Now, the other thing that we look at is exit options or exit methods, and we can have indicators, we can have time-based, or we can have profit-based exits. So there's a number of ways we can get out of the market. We can use, say, the RSI crossover to get us out of a strategy. We can use the MACD Bollinger Band strategy that we've got as an exit strategy. We could use a moving average, a crossover moving average above or below to get us out. We could use a spike or a decrease in ATR. So there's lots of different things. We can use the previous high, previous low, price extremes as an exit potentially on a strategy. So there's a number of ways we can get out of the market, and exit methods are simply just would your concept be based around your exit method, or would your concept more be based around what you've identified as an opportunity in the market as far as an entry and how to extrapolate profit from that entry? Yeah, it could be both, couldn't it? It could be that your entry is kind of a little bit, you might not be really too concerned about your entry, but your exit is based on what happens next in relation to the market volatility or the timing or the movement of the market. So both could definitely have an impact on, obviously, on your concept, significant impact. The exit methods we've just spoken about: indicators, time-based and profit-based. Testing our concept is obviously means that we need to, as we mentioned last week, and I'm going through this quickly because I want to get to the charts, obviously, and take you through kind of the process I went through. What market are we going to look at? What time frame? Because your strategy may not work in every market or every market condition. and your time frame may have to be specific. I'm going to give you an example of this tonight of some markets that have good time frames or tick charts that show up a regular, really good patterns, and and your job is to find those time frames, isn't it? And that's what we do with our testing, isn't it? We basically look for suitable time frames. Would we look for, if we had a strategy that was really a ranging like the cycle trader strategy, wouldn't be wanting to be trade that on a very fast time frame, would we? Because it's not really matching with our methodology, is it? Our methodology for cycle trader is that we want a rangy market that's giving us nice even patterns of support resistance. So we want to avoid a lot of noise and a lot of movement in the market because we're running as say a cycle trader strategy. So we have to have a good idea that basically our strategy ideally wants to be fitted to a certain market or market condition. Range and data obviously are some things that we're going to test. Slippage, commissions, and knowing what your benchmark stats are. So that's an example of some benchmark stats there. Everybody should be fairly familiar with that from our PME, our Portfolio Manager Elite spreadsheet. We do some sample testing, as we mentioned last week. Once we do our sample test data on how many trades do we have to test up first before we want at least 20. I mean, the more sample trades we've got, the better. But as a minimum, you want to see an edge in 20 trades. And if you're confident in your system and you believe that, look, I'm very confident in the strategy I have, I'm not getting the result I thought I would get out of 20 trades, you can certainly add more data to that, because those 20 trades may be a bad week or a bad month of your system. So you can certainly improve or add additional data. Now, once you've got your 20 trades and you can see that there's a clear edge, you're going to proceed with your testing, and that's really then we move into the phase of developing up the strategy, don't we? We want to go in and we want to automate the process, because that's our ability to quickly test up multiple markets, multiple time frames, multiple market environments, and then we can start building into our strategy different entry methods, can't we? We can say, right, well, we've got a basic entry, but we can add in different filters to determine our entry method. And we can do the same with exits, because we don't want to manually test that process. That would take a lot of time, effort, and resources. Whereas if we can just see that identify edge with a fairly basic strategy. So when you do your 20 trade sample test, is that going to be a fairly basic strategy that you test? Would you think that you wouldn't want to have too many components too many moving parts to your strategy initially? Remember, the more complex a strategy is, the harder it is generally to get it to work well in the market. So keep it simple. Simple's always best. Simple is always best. I'm going to show you my strategy here for the V2 trend, the entire strategy of how I put it together. And you'll see when we look at it as an entire strategy that it is very simple. And you've got obviously your filters there. So we want to build in the external filters once we've got our sample test done, then we can really go and do the independent testing and add in filters that we think may improve the overall performance of the strategy. Now, why do you think we're going to be spending more and more time developing up new strategies? Why do you think it's important for us as a group to be continually improving our strategies? There's an obvious reason that we want better results. We want to get the best strategies we can have possibly put together. Diversification is another one. What else is there that we need to do? Now, you've probably seen from the email that Luke sent out this week about the first loss platform. We're getting a lot of interest from investors and smaller funds, and obviously capital in Asia as well. And the goal for us is to develop up a number of platforms and strategies that we're able to test with multiple diversified strategy. So it's really important that we, as a group, have a bank of strategies that we can call on at any time that are just not bound to one market or one time frame. Because the bigger the group grows, obviously, we don't want everybody trading just the one market or one market on multiple strategies. We want to be able to diversify across the board, with futures, forex. There'll be some options traders in there, some potentially some stock traders as well. So it's really important that as a group we continue to develop our platforms and develop our trading methodologies and improve those. So part of that is obviously making sure that when we're doing our testing, that we're trying to make these strategies. Our goal is to make these strategies as robust as possible. But we know at the end of the day, it doesn't really matter what happens. Even if we bring a system to market and we do our 20 simulated trade test and it falls over, it may be that the market conditions have changed. It may be that we were too tight on our testing. We optimize the strategy too tight, and that's where we get that accept or reject outcome, don't we? We basically take it to market. We've developed up a lot of strategies now, so we can quickly, within the group, we've got the technology and we've got the experience to tell fairly quickly whether a system's going to fall over or not. And this accept or reject methodology that we have, whether it's going to work or not, is very quickly vetted during that 20 trade process. So let's push on. Now, just because you start a strategy and you start live trading a strategy and it starts to basically lose money or go into drawdown straight away, does that mean the system is highly optimized or not going to perform in real time? Does it necessarily mean that we've got a bad strategy that you've put together? No, it doesn't, does it? So it may be that the market conditions aren't right, the volatility's dropped, there may be something to do with the actual market you're trading. There might be, the market may be waiting for some type of movement, and basically the range falls out of that market. So it's very, or potentially it could be going through its cycle or its seasonal movement. So you've got to be a little bit careful about making quick decisions about your strategy without finding out the why. So one of the big things about performing a out of sample test or a test that's running in real time or in simulation, you really want to find out, if you reject a strategy, you want to have a reason of why you're rejecting it and why it's not going to work in the market. So the strategy may be good, but it may be the timing that it's off. So you've got to be a little bit careful. And you could, just like Jamin said, you could just be hit a bit of bad luck and get into a drawdown first up. So that can happen too. So obviously we know that the sim trading goes for 20 days. Now I'm going to just cancel out of that. I'm going to jump straight into the charts here. I want to take you through my strategy methodology for the systems that we have in play at the moment. And I'm going to explain what each of these components are based on. And when you're looking at your strategy or your systems, this may give you some, some ideas about the strategies that you potentially may be looking at putting together. So remember that how many people here have read John Sweeney's book, Campaign Trade? So what John Sweeney talks about, he talks about the opportunity of getting the most out of your trading. You don't want to necessarily be just trading the trend or just trading against the trend or trading during flat periods of the market, because really the idea is, if you treat trading like a campaign, like a war, that you're potentially in there to advance, retreat, and take opportunity where you see those opportunities opening up, then you can really develop a methodology that takes advantage of all phases of the market. Rather than just being in when the trend's on, if you think about your trading as a campaign, your campaign is to build as much profit during the process of the market activity as you can. So what that means is that instead of coming to the market and being a one system trader, you're going to want to develop up a methodology and an approach that allows you to trade and take advantage of all phases of the market. So whether the market's trending, whether the market's consolidating, whether the market's starting to move into a counter trending position, whether the market's starting to kind of top out or get to a point where there's a potential reversal in play, or whether the market's ranging, then you want to be able to take advantage of those phases. So what I did with obviously with the dynamic support resistance and this V2 strategy when we were initially looking at putting this together is I thought, well, I'm going to break this strategy down into components and I initially tested it on crude and the DAX. And what I found was that depending on the tick size, there were times in the market and there were tick settings in the market that bode very well with this kind of campaign type trading. So what I needed to see was obviously market structure. So the market structure for me was that I needed to see the tick setting or the time setting or the range setting that I was testing show a clear trend. So I broke it down into phases. Basically, I was looking for charts and looking for settings that presented a trend initially. So for those of you who are familiar with the trend trader, that would be breaking resistance. So here we have that break of resistance. We move into a trend with the cyan candles or price bars. And this would be what I would call like a phase one of our trend move. Then from here we would move into, so that's our trend, move into kind of like a pullback situation here, and this is where our dynamic obviously support comes into play. So we've already got two systems in play here at the moment, haven't we? Would everyone agree there? So we've got our trending strategy where price breaks that the resistance band, and then we've got our pullback strategy. So we've moved above. You can see clearly we've got our moving average. We've moved above that moving average. We've broken resistance. We're now into a trend. We get a move up, a bit of a pullback, and then we've got into this continuation type setup. So this would be our phase three of our move. And then what I looked at was, well, when you're looking at this type of market environment, whether it's on a 450 tick chart or a daily tick chart or a weekly, you're typically going to get some type of counter trend against the move. So this counter trend play was the initial play that I built into the strategy so this is the initial pullback, and there's after our second pullback, so here's our first pullback, second pullback, which would be basically, this would be our fifth kind of wave up. If you're familiar with Elliott wave, obviously it breaks down movements or impulses into waves, and this would be our kind of fifth run up. Then you would get your counter trend play. So to me, if I could see two distinct pullbacks in the market I was trading, and then I could see this resistance appear based on failing price action or failing momentum like we have here with our MACD. So you can see here that clearly in this run up we've got price moving to a point where this is where we've got a nice run up here. You can see we've got momentum. We're above the MACD line, above the zero line, so we've got good, strong, bullish momentum. But when we get to this point here, this is where we start to see the momentum on our MACD drop, and we're starting to head towards that zero line. So that would be the catalyst for potentially a counter trend move. Now, is the trend over? Not necessarily. So we might get, say, a run of five of these waves up, and then you've got that counter trend play in position. So that would be where our next strategy would come into play. So we've already had a trend, we've already had our pullback, we've got a continuation move, we've got a second pullback, we've got our potential counter trend play, and the counter trend play is really based on failing momentum. So when I'm looking at developing this system, I'm thinking, right, well, I'm starting to see that this this pattern occurs a lot with this dynamic support and resistance. Obviously, would this be happening in this clear? This is a fairly clear setup to me. Would this be this clear all the time in the market? Would we be able to load any chart up, say an 89 tick, a 55, a 987? Would it always be this clear in the market? Absolutely not. It would be, most of the time, it's nowhere near this clear. But how do we frame this up so that we allow ourselves to be able to capitalize on different components of this within our strategy? If we're developing up systems for this type of strategy, then we would need to separate the strategies, wouldn't we? And that's exactly what we've done. We've separated but you can see here that when we separate the strategies and then we put them all together in a multi-system strategy, they actually make sense, don't they? They actually make sense. And what it does is, what does it actually do for your overall portfolio? What could this be doing on your portfolio? Because what I've done in the last couple of days is I've started to put a crude oil strategy together, a multi-system that has these components in that strategy. So it would improve, because if we get into a move like this where we do get it right, we're winning on pretty much most of our setups, aren't we? And what we're doing is we're almost hedging ourselves for our strategy. So the idea with this counter trend play is that we want to, even though even though we're getting like a drop in momentum, this here, we may not say we didn't see this. This might consolidate here, hit support. We've actually got a third pullback there, and that may be the catalyst for consolidation and then a massive rally again. So we go into a second phase of breaking new highs because of the momentum of the market. But the beauty of this is that we go into another trending phase, don't we? So even though we were looking for the counter trend play and potentially the end of the trend, which I haven't got to yet, it doesn't matter, because either way, we're not really too worried about that, because we have a play for every phase of the market. So whether we get burnt on the trend or burnt on the counter trend, it doesn't matter, because we've constructed our portfolio and we've constructed our systems so that we've got a multi-system strategy that allows us to go pullback, continuation trend, counter trend. So it's almost like a perfect scenario as far as hedging, because we know we're going to be wrong. At some point, we're going to be wrong on our system, aren't we? There's no dispute about the fact that we'll be wrong on the market somewhere in this market environment. When we are wrong, we basically will capitalize on being right on a strategy that we have built into the portfolio. So what happened here is when we looked at this, okay, we've got the trend, we've got the continuation, we've got the pullback, we've got a pullback, we've got a pullback. We have the counter trend play where we're looking for a momentum drop. We also have what we call, what's one thing we're missing here that is setting up nicely, and you'll see it on the currencies particularly well. When there's a big currency move, what happens usually on a big 100 pip move or a 200 pip move on the currencies? It happens all the time. You get that consolidation, don't you? So this is what happens typically, and this is why we set up the cycle trader. The cycle trader is perfect here in this area here. This is where the cycle trader kind of earns its money. This is where it's the bread and butter of the cycle trader. So I would be saying, right, well, the cycle trader kicks into gear here. And when does the cycle trader start working? It starts working when you've lost the trend, doesn't it? So again, we come back to, all right, well, why are we trading a multi-system strategy? Because we know that at some point we're going to be wrong. And when we are wrong, at least we've got multiple systems to offset being wrong. So if the counter trend doesn't work, then the cycle trader will make money. If the cycle trader doesn't work, the trend will kick back in and make money. So really, there's a massive advantage to this multi-system approach. And when you're looking at your systems, that's how I want you to think about constructing your strategies. I want you to think, don't just think about, right, well, I'm a trend trader, that's how I roll. I want you to think about the profile of the market, and I want you to construct your strategies so you can take advantage of multiple opportunities. Because at the end of the day, I want you to treat your trading like a campaign, and this is why we constructed the 12-week challenge. This is why it's important to have this multi-system approach, because at the end of the day, we're looking for markets that present opportunities like this. And it may only be for you a two-strategy approach. You may just run trend and cycle. You may run trend and counter trend. But either way, it's really an opportunity. If you're developing an idea or a concept, how easy is it then to extend to another idea or concept from your basic idea, from what you've seen here? If you break the market down into phases and look at what's happening with the market, how easy is it to start to develop a secondary or third strategy that potentially could be something that allows you to capitalize on when the market doesn't go exactly the way you want it to go? Can you see that is an easy transition now from originally having one idea or concept and then evolving it into another? Because what happens here is that in this strategy here, this counter trend play is really a counter trend. Is really it's like stepping in front of the bus, but you're hoping the bus has kind of really it's running out of petrol, it's losing its momentum, and the brakes are on, and pretty much it's about to slow down and stop. But there's a potential that the bus will just keep going. So the counter trend is you putting your foot out initially, but you need to, obviously with the counter trend, you may want to have key level, or you may want to have that momentum. You definitely want to have that divergence setting up, and obviously volume as well. So the other component to the counter trend, which is the second phase of this stepping in front of the trend, is the end of the trend. So the end of the trend comes when you see consolidation after a big move. You see that you've got volume depletion. So what do I mean by volume depletion? I mean where you look at the bid ask and you've lost all the buyers on your strategy, and it's basically a huge divergence to the selling side. So there's no more, even though price is still up around this area here, you've got no buying volume on that move. So what happens then if we have a massive imbalance to the seller side, and we're still in this territory here where we're making new equity highs, we're losing momentum on the MACD. We've already had 3 of these resistance set up. We're basically at we're at 7 as far as our waves. What do we think is likely to happen when we have volume depletion? We've got MACD divergence. We're not quite at a key level, but we're just above a key level. What's likely to happen as far as our strategy here? We can start to look at, right, well, this is really an end of the trend strategy. This is telling us that if we've got a volume spike and we've got volume divergence, then this is where we would be sellers at this point. So that's where we would be. And what if we're selling here and this doesn't work out for us and we break this resistance here, what do we then become? So if this thing just consolidates and takes off again, what do we become here if we're trading two accounts and we're trading our multi-system strategy and we're selling here, but then what we become trend traders again? Exactly. So we don't have, or continuation, we don't have a bias to the market. We're just playing statistically, we're playing exactly how we would trade the strategy. So, and whatever strategy that is, so we just set the phases up and then we basically trade based on, and you can see here that we have a nice pullback. We're losing momentum in a serious way, and then what happens here is this thing gaps down and falls off a cliff. Like that's a really good example, obviously on the 450, that selling this area here was a good decision. We didn't get a chance to get in on the trend because it didn't break, but this thing moved down here and moved down $1.79. So that's a massive move. Now, how much risk would we as traders be prepared to take on where would be your stop if you were at the end of the trend, you had your wave count at 7, and you had your resistance here, and you saw that the MACD was in full swing as far as divergence? How much risk are you taking on this trade to go short here on this bar? How much risk do you think you're taking here? That's your entry there. Because your first bar is your setup on the cycle. Because remember, you could be in the cycle here as well. So you might decide, well, I'm a cycle trader, and this is how these strategies can evolve as well. You might decide, right, well, we could build the strategy so the cycle trader is able to count the pulses in this market, and it could potentially be trailing a strategy where it has 3 or 4 of these resistance set up. Instead of being sell support buy resistance, it could potentially trail that down and use the dynamic resistance as its stop. So instead of just taking, and it would get potentially knocked out, a lot further down. So there's ways, once you've got a methodology or a concept that you want to explore, it's really important to look for the opportunities, and obviously it's not going to work all the time, and this is why testing the different phases of the market. But once you're clear with your strategy and how it all fits together, and then you want to see that set up in real time, you can be very specific about how those particular elements of your system are going to play out. So you can see that when you have your concept, you want to break it down. Why is it important to break down the elements of your concept like we've done here? I could have probably had this coded up so it trades as one system, but what's the disadvantage of that? Apart from being very complex, because it's way too complex, but also too, can you imagine? I mean, you guys know what the work is involved in breaking down what's making money. Imagine how complex it would be to go through your performance reports and work out what systems are making what money. So really, with any strategy, and it would be almost impossible to test each component separately. So you want to keep the systems very basic. Together you can see it can be quite complex, can't you? But and this is what brings me to, this is obviously an example of crude here, but if we look at, and you can see there, this strategy, if we put this strategy together, we build into the cycle trader, because remember there's 2 systems at work here. There's the cycle and there's the end of the trend. So both of these systems could have done very well. The cycle may have gone out at support, or you could have trailed it based on this kind of not intuitive, but pre-programmed analysis of the market. If you know exactly what you want from your strategy, you can code that in. They can be pre-coded. And the same with this end of the trend. Now, obviously, had you have used that resistance, then that swing high, support high, low, that would have been a really good way to kind of capture profit on that. Obviously, that big move down, but it could have been anyway. You could have used the moving average. You could have used, you wouldn't have got as much of the move on, obviously, on the TP stop. But there's a number of ways you can do the swing high, swing low. Number of ways you can kind of lock in profit there on those larger moves. And this is what you're probably going to explore when you start looking at your own strategy anyway. But one thing I wanted to say here is that what I've done is, based on what we know here with this strategy, I've started putting together the trend in this kind of the crude strategy based on this methodology. So what I've done is I've grabbed a number of crude strategies and I've started loading them into this crude PME spreadsheet. So what I've done is I'll go to the system manager here. I've got a trending system, a cycle. I've got actually 3 trends, so I'm going to have to lose a couple of those or one of those. I've got the new Fortress strategy that we're testing at the moment. I have, which is kind of a momentum system anyway. I've got the counter trend, which is the one that I've just described in that strategy. So that's doing reasonably well. Very low drawdown, as you'd expect, because we're taking a little amount of risk on the trades. And that 6,630 was the profit over about 6 months. The pullback, you'd expect that to be low drawdown. Drawdown's a little bit higher than I like at 1160, but again, the profit not too bad. But what was interesting was that and you'd expect that the cycle would be the most profitable. Would everybody agree that they would anticipate the cycle to be the most profitable? Anybody surprised with those stats there? Now the systems we need to build in here are obviously we want to build in the end of trend, and we want to build in a cycle strategy that is able to capture that final that final breakout move, that potential trailing stop on that 7th wave. So we're going to do a little bit of work with those strategies, but I'm going to build a couple of portfolios up that are able to track a multi-system approach on a specific market. So then we can see, and you can see here by applying those, our largest drawdown at the moment on these strategies is T18. Now, I'm not surprised about that. That's a 233 tick. It's a larger tick chart. It trades in portfolio 2. Not really surprised about that at all. But that's the drawdown. Now, this is the advantage to having a multi-system. Have a look at the portfolio drawdown on this crude portfolio. It's 1680. So if you were to load up and trade on a 20k account or T18, you decided that was your system you're going to start with. You are better off starting with multiple strategies, as we all know, with a lower drawdown, and we'll look at your overall net profit to max drawdown, 45.64. Now, had you traded crude T18 on its own, your net profit to max drawdown is, let me just find that. Let's go in there. I'll just grab that up. That's J, so we'll just go to J. 10.2, yeah. So basically, net profit to max drawdown 10.22, and that's really exactly where we want it to be. So that's a great. What's our minimum max net profit to max drawdown that we would accept as traders? Because if we go back to our system management tab, now we've got to remember that this thing's running at 47%, but its average trade net profit is a massive 262. So if you go back to if you're ranking this overall on average trade net profit, what's the outstanding feature with T18? Even though it's got a slightly bigger drawdown, what is the compelling thing that drives you to list that as probably one of your better strategies? Apart from the overall profit, yeah, the average trade net profit is huge, 262. So you've got to balance. It's the most profitable strategy. It's got the largest average trade net profit. It runs at $99 a day. It hasn't got the highest daily profit rate. That falls to CT50, but its net profit to max drawdown is 10, and our minimum that we want to see is 6-1. So we've got a 10 there. That's fantastic. But if you consolidate and put these strategies together, you're looking at a net profit to max drawdown of 45. You've got an average trade net profit of 63. But the beauty of it is that your max drawdown is 1680. So what's interesting here is that again, it comes back to, well, if we start adding systems together, and we start with even if we're starting with that account, that 20k account, are you better off trading multiple strategies? Are you better off trading, say, 2 or 3 or 4 strategies as opposed to just the one? Because what happens if you turn T18 on and look, it's been going really well, but suddenly the market conditions change, you lose a bit of volatility. Your one strategy has you out at 1975, you're done. Basically, you've hit your max drawdown. And whereas obviously with these other strategies, if you look at the correlation analyzer, the system correlation analyzer, the analysis for the correlation of drawdown is very, very good as far as the spread of these strategies. And just from that example we showed then in the charts, ideally what we're wanting to see is we're wanting to see systems that behave very differently, aren't we? If we've got multiple systems that are very differently programmed in relation to their entry points and they're framed up based on a multiple system approach, then our balance should be very good as far as our net profit to max drawdown. So the other thing we can do is how can we improve this overall portfolio? So let's go to the portfolio itself and let's drop a couple. So we'll drop a strategy or two. So why would the Fortress strategy improve the portfolio if its drawdown is 490? Let's go and have a look here. Let's drop T18 for a second and just see what our... So that T18 definitely needs to stay in. It doesn't really impact on our drawdown at all, does it? It's marginal. It's less than $100. So, yeah, the low average trade net profit, that definitely could be a consideration. But what would we be... So if we look at the average trade net profit, we're going to be looking for strategies that at $30 it's a bit skinny, isn't it? So that's probably the lower end, but you could say that for the counter trend strategy as well. So these two are definitely having an impact on our overall portfolio, although they do carry a very low drawdown. And what would you say would be the counter trend? The counter trend strategy could probably take an average trade net profit lower than $50 because it's trading against the trend. So you would be less likely to get slippage on those. So we could definitely improve the overall average trade net profit, which is our goal, because sitting up here on its own, 262 is a very good average trade net profit. The other thing too is that we probably want strategies that have got a good number of trades in them, just so that's showing you a little bit more robustness in the systems. But obviously too, we want to make sure that the systems have got a good profit factor. So across the board, if we're ranking them and the other thing too, one of the other things we would need to consider is, all right, well, what happens if we take a strategy out? How does that impact on our overall max portfolio drawdown? So that's one of the things that we need to really kind of look at as far as our performance. Could we do anything else to improve the overall portfolio? Could we add systems in that may knock that drawdown down? Could we potentially go back to our profile and potentially work on trying to improve the overall drawdown of the trend? So picking these trend cycle systems and trying to work out how we can improve those. Because adding additional strategies in can have that effect. It can obviously improve your overall net profit on your strategy, on your overall portfolio, and also reduce the net profit. The max drawdown. So that's one thing we could definitely do. We could add in multiple strategies there that could help us with this entire process. So guys, what I'm going to do now is I'm just going to take you through quickly the systems that are running well, that have been running well for the last 12 or 14 weeks, and just doing a little bit of an update this week on a couple of these strategies. But what I also want to show you too is that counter trend system that I put together on crude has an interesting partner. How many traders here are trading the DAX at the moment? Or how many traders are tracking the DAX? All right, so this is the DAX. This is this DAX strategy, and this is on a counter trend system. So this is basically one of the strategies I've started playing with as far as trying to balance out the portfolios, particularly with the DAX, because for many of you who are tracking or looking at the DAX is a very, very, very volatile market, and we need a good balance with that with the DAX strategy. So what I've done is I've put together, similar to with crude oil, I've started putting together a portfolio for the DAX, and my goal is to. One of the things with the DAX market is that it produces very, very good profit as far as a market. But what's one of the downsides to the DAX, or two downsides to the DAX that you could probably tell me straight away? It's got good volatility, but it typically has a large drawdown, and it's 25 euro per point, so big margin, big drawdown, and that's really a tough thing to to balance sometimes. So what I'm putting together is I'm doing something similar to it's got large point value exactly, trying to get a situation where we've got a multi-system strategy on the DAX as well. So I've got the crude one together. I need to work a little bit on getting that drawdown down a little bit more. Maybe put a couple of better strategies in, or working a bit better on a couple of those strategies. But what I've found is that this counter trend is a starting point. Now, everybody's seen the strategies Mabel put together on the DAX. They were phenomenal. But they did have a fairly big drawdown. Now, and there's a couple that I know, I think Hans has put together a couple on the DAX. There's been a couple of others that have done some good work on the DAX. What I want to do is I want to consolidate some strategies together that have a small drawdown of at least 3,000 or less. So this one here is 3,000. That would probably be the highest drawdown I'd be prepared to accept. And then I'm looking for strategies that are going to obviously offset this larger drawdown. The thing I want to do though is I want to make sure that our average trade net profit is around about $100 or greater. So when you look at this portfolio once I've finished it, we're going to be going for a very high average trade net profit, a drawdown of $3,000 max as far as a system, and then obviously what my goal would be once we combine the strategies together to get that down below $2,000, because what typically will happen if you can get the drawdown on a multi-system strategy on the DAX below 2,000, your profit potential is huge. If you look at this system here, for example, 52% win rate, but have a look at the profit that it's brought in over the same period. This thing has made $21,000 in the same 16-week period as every other strategy on our books. And the best performing strategy of the systems we have is the CT50, the Cycle Trader. So at 9,200, the second best strategy would be gasoline, followed by probably the Fortress strategy at 7.2. We also have one here on gold. So that gold strategy at 8.6. So that they would be the top strategies at the moment. But if you look at, now I haven't gone through and looked at the momentum, all of the momentum strategies. I would be expecting that the momentum systems would definitely be the top ranked strategies because they generally yield in a lot more profit, but they also turn off fairly quickly as well. But this DAX strategy has been outstanding. So we're going to watch this over the next couple of weeks going into obviously early next year, January. And we're going to see how this counter trend strategy plays out. And obviously, as I said before, I'll be building in a counter trend. I'll be building in a multi-system approach on the DAX. The other market I want to tap into is the Euro US dollar. I'm going to put together a multi-system approach on the Euro because I want to see exactly how we can kind of use these 7 different strategies to really kind of get the most out of the Euro as well. So guys, that's probably going to wrap it up at the moment. I'll be uploading this spreadsheet tomorrow. We'll be putting together or putting out some more or some newer settings as well for some of these strategies, and I'll be reviewing some of the momentum systems, because gold is one that we haven't really looked at. But how many of you have checked out the gold strategy? Had a chance to have a look at the gold strategy at all? That's okay if you haven't. I'm going to do a bit of a walkthrough video on that tomorrow. It's running really well. So if you do get a chance, it's really doing very well. As I said before, heating oil seems to be very popular at the moment, and also obviously gasoline. There's a couple of strategies there that are doing exceptionally well. So if you want to just keep an eye on, obviously, the All Systems Results tab. If there's something you want to have a look at, definitely jump into Dropbox. Hopefully this was a good little update for you, and gave you something to think about as far as the system development. Remember, the Trello board is up. I'm usually putting notes or updates in there regularly, so keep a track of that as well. There'll be a few videos getting posted in Kajabi. There's a couple of videos there that go through the CT50, the cycle trader as well. So guys, that's about it for tonight. Any other questions before I go? Luke did send out an email to the pro traders this week on the First Loss platform, which is an exciting initiative that we're putting together as for our pro traders. Once you've gone through and done your 12-week challenge, and you've got your live trading up and going, and you're feeling very comfortable with it, and you've had a good couple of months, then you've got the option to obviously have a go at the to obviously go and put yourself forward for the platform, and that there's a fair bit of detail in that email. But if you want more information about that first loss opportunity, then definitely email Luke back, and if you're considering taking that up as part of your process or your progress through the program, let him know, and he can kind of steer you in the right direction. But part of what we're doing here, obviously with the 12-week challenge and developing the strategies up, is to get you in a position to trade multiple systems. That's really what we want. We want you in a position to trade multiple strategies. You can see the huge advantage as you've gone through the money management, that there is a huge advantage to having a multi-system approach. And hopefully I explained it fairly well tonight as far as my strategy and my combination of strategies. That's really what I'm looking for when I'm trading. I'm looking for that multi-system approach that we have here on crude oil. So putting those together so I can get not a blatant hedge, but I can get that hedging mechanism working as well. So guys, that's going to wrap it up for me. Any questions before I go? No, all good. Now, a reminder that the two new strategies will be coming out in the next week or two. So we have a swing trading strategy on TradeStation. We're working at the moment on our MACD Fib trader, and that's very exciting. I'm really looking forward to that. That's probably going to be more of a counter trend strategy, so or a continuation type strategy, depending on how you play it as far as applying it into the market. But again, you can apply it on different time frames, different tick charts and time-based charts. So that's going to be very exciting. So within the next probably 2 weeks, we'll have 2 new systems. We'll be doing a fair bit of training and previewing them in the room, but very exciting stuff. So thanks for your time, everyone. Have a fantastic rest of the evening, and we'll catch you next week. Cheers.